The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, I'm finally back from down under. Boy, you talk about a faraway place. It is really quite amazing. I mean, you look at the map and you see Australia, and then you see New Zealand. So that must be like a 20-minute cab ride over there, and it's a 4-hour flight. And the countries are lovely. There's no question about that. They have some wonderful scenery, fantastic seafood. The time zone for trading is probably not in the top 10, but for them it works out really well. But we had a wonderful trip. And it was very, very rewarding to see all the folks that we got to meet. We got to meet a whole bunch of our friends that we've done business with through the years, and some we've never met before, a few we have, and it was really quite nice. The first question that we had today came from one of our listeners about the chart of Apple. It was possibly because when I was down under, they asked me to put my feet to the fire about a trade for the coming next few months, and I decided to take a look at Apple because we're completing this long-term AB equals CD pattern that is going up into the 112.50 area. And this is very similar to the ABCD pattern we had when Apple topped at 703 and then went down to 385. It's the same type of pattern. That's the Thunderbolt pattern right out of Gartley's book, page 249. And all we're looking at here is a parallel move between A and B and C and D. That's really what we have going. So we've got that coming due right now. And we'll take our first caller here, then we'll come back and we'll talk about Apple just a little bit later. We've got our friend Brent from California. Brent, are you there?
I am, Larry. It's great to have you back.
Thank you. What can I do for you, my friend?
I had a fairly involved question, and I wanted to call you early in the show so you'd have ample time to answer it for me, if you don't mind.
Okay, there are no dumb questions, my friend, so fire away. There might be a few dumb answers, but there's no dumb questions.
So my overriding question is about future contracts, and specifically I'd like to kind of focus on natural gas.
Go ahead.
My question is, I know right now the most active contract would be the December contract. And then I went ahead and looked at the January contract, and it seems to have a premium of about 13, 14 cents. So the forward month has a premium to it.
Okay.
And then my question is there always a particular time of the month that they roll the contracts? And then secondly, as that is rolling into that other contract, does it pick up that premium, or how does that work?
It varies. There is an actual specific date that they roll it over. I'm not sure exactly what it is. I believe it's around the third week of the month. As I recall, back in February of last year, gasoline dropped $10,000 a contract in one day. And that was mainly because of the nearby contract. But each one of them will be different based on the demand. Now, that's a very heavily traded by commercials, so that's a pretty true value of what things are looking at. In other words, they're expecting prices to be higher in January when they are now. It's not a backwardation market where it's cheaper back there. It's more expensive, so demand is saying there should be stronger markets in January. Maybe they're seeing a cold front, much like we're having here on the East Coast right now, with with temperatures, below freezing. So that could be the reason. But frankly, Brent, when push gets to shove, I just look at the bars and the charts. And if they're going up, there's more buyers. If they're going down, there's more sellers. And I try to stay out of anything that's even close to delivery. I like to be out a week or two before any of that happens. I don't want to get caught in illiquidity and stuff like that. So that's what I primarily focus on. I hope that helps, but that's what I do.
It does. So I guess talking about the charts on natural gas, I've been in it from the bottom, but I also bought into that retracement, that 618 retracement that we had here recently. It went down and filled the gap, and it had like I said, a 618 retracement around. I'm using the December contract around 395.
Yes, that was correct. I believe you were on the air. That was about a week or so ago when you called about that. It was trading at, I think, 415, and you said if it broke down to that area, as I recall. I remember because I bought some of it. I didn't stay in it long enough, but it certainly worked.
Yeah, so what do you, given that, I mean, for me, a 1-to-1 would be up around, close to 5 or something. Is that what you see, or do you have something different in your...
It could very easily do that, that's for sure, especially when you have this cold weather that we're having now across the East Coast. There's no question about that.
I guess my other question, for it to be a legitimate AB equals CD, does it have to break the C point? At that point, you now consider it to be or have a better chance of actually completing the pattern?
Oh, yes, you have to get above the B point in order for it to be a complete A, B, C, D. No question about that.
Okay, and that's kind of, once that happens, then the probability goes up. Is that correct? Or?
That's correct. That's right. That makes the probability, far better than 3 out of 4 chances that it's going to go higher up to the D point.
Okay, well, I really appreciate your time, Larry, as always, and I just you're a wealth of information, so anytime I can...
Yeah. Well, I'm here to help you folks. If you have any questions, just come on anytime, and 800-877-927-6648.
Well, it's great to have you back. You take care, and I'll plan on talking to you soon.
I hope so. Thanks a lot, Brent. And a happy holiday to you if I don't talk to you before Thanksgiving.
All right, same to you. You take care.
Okay.
All right.
Speaking of holidays, folks, we're coming up next week. The 27th is the Thanksgiving holiday. That marks the most positive day of the year, the Friday after Thanksgiving. That's primarily what we're looking at here coming into the next holiday. That is the most positive of any of the moves that the market has. In other words, the market has a better than 75% chance of going higher on that day. We've had a quick question come in from the Den, the Tiger Den, TFNN, and that is that the price of gold has been relatively wild today. We had a high of $1,201. We went down to $1,175 an ounce, where they rang the bell for the price fight to begin, which was the 382 retracement off of the low at $1,131. That was also the exact number of dollars down per ounce that we made on the last correction after we rallied over $50 the first day off the 1131. So we've got some harmony working in the gold market right now. Frankly, I'm very bullish gold, for a potential really good rally here, and I think it's got a really good chance to move higher. We've already reversed most of the losses for today. It's still down on the day, but just a very small amount, and so in fact it's up on the day right now, so this is good. Whether it's going to continue or not, we don't know, but silver's also put in a pretty good bottom. We rallied over $1 an ounce. We'll cover all of this on the commodity show tomorrow, but frankly, I wanted to talk about stocks today because Joe DiMaggio, I was going to come on the show today and start singing the song from The Graduate. Where have you gone, Joe DiMaggio? Anyway, that was sung by... what was the name of that group? I can't remember. Loggins and Messina, and not Loggins and Messina. Simon and Garfunkel. I knew it was two guys like that. That's what it was. It was Simon and Garfunkel. Well, anyway, DiMaggio hit in 56 straight games. That's one of the most sacred records in all of baseball. No one's even come close. Pete Rose got into the 40s. That is George Sisler back in the 1950s and stuff. And after DiMaggio hit in 56 games, on the 57th game he went 0 for 4, and he had 1 strikeout, and he had 3 absolute monster line drives that should have been extra base hits, but they were caught on fantastic plays. And then from games 58 on, he hit in another 15 straight games. The reason why I'm bringing you this up, folks, is we have broken a record here that stands since 1929. The stock market going into the high September 23rd had a day where it was up 6 days in a row where it closed higher into new high ground. That had never happened before until last week on last Thursday when the Dow Jones, which they used as the gauge of this, they didn't have an S&P 500 back in 1929, it closed higher 7 days in a row. This also closed higher in the NASDAQ, and it also closed higher in the S&P 500. However, the broad index, the New York Stock Exchange Index, is still standing right at the 786 retracement of the high from July where we had divergence, and also in September the 3rd when we had divergence. So the real market has not gone higher. I know no one wants to believe me, and I'm going to get tired of standing on my soapbox. I'm going to fall off the soapbox one of these days, but it's not going to be today. We're going to see if this market's got the power to do it. We've got the Bradley date coming in about 2 days, I believe. This is Wednesday. So we've got it coming in. It'll probably happen over the weekend would be my guess. But that's the one that, brought the market to the bottom on October the 15th. And we're rallying straight up into it. And I think if you call up 23 days in a row, basically, in the market up, I think you're correct. It's had a higher high or higher low for 23 straight days. I'm going to give you a little test now, and you'll win a prize if you get this. Go back and find out how many times that's occurred in stock market history, and then drop me an email, and I will send you your prize. So it's a very interesting statistic. We're also having another one, is that we have a situation like we had in 1979 where the market made new highs in 4 consecutive weeks. And during that time, it was the smallest gain in 4 successive weeks of new highs that they had ever had up until what happened this past week. These past 4 weeks have been smaller gains than what we had back in 1979. What happened in 1979? Let me see. Not very much. It only took the market 3.5 years to get it back above that high, and it retraced over 50% of that whole move. So we got to be careful up in here. I know things look good, and the food stamps are coming in, and the diesel fuel on Tom's boat is dropping, but things are not always right in River City, folks. So you got to be prepared here. This is an outlier event under any stretch of the imagination. I want to get back to Apple here because I wanted to focus on that. That was one of the things I talked about. It seems that Apple is very popular in Australia and also in New Zealand, and everybody in the room had an iPhone except me. And but the thing that's interesting about this big ABCD in Apple on the long-term weekly chart is it has a 3-drive pattern that's associated with it. It also has a potential of, they had a exhaustion gap here that we had last Thursday when the market gapped up from 110 to 111.5. So 111.5 is really the number you want to look at. That was the number that Basil even talked about on his show. But once we get the price below 111.5 in Apple, should that ever happen in our lifetime, that would be the place to really watch it. Got to take a little break here. We've got gold coming back really strong. Stocks down still a bit, but coming back. And if you have any questions, 87.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we are talking about the Bradley Stock Market Index right now. I posted the chart with the Bradley over the Dow Jones Industrial Average. And as you can see, we have bottomed around October the 15th, and we're coming up into the crest that we're looking at right now. It could be today, yesterday, tomorrow. It has an orb of 3 days, so it could be anywhere between anytime this week or early next week, but not past Wednesday of next week. So if we get above 17,800 in the Dow, I'm afraid I'm going to have to send in my technician degree, and it comes from Pesavento University, so there's only one other student there besides myself, and that's my daughter Jill, so we'll have to turn in our diplomas. Anyway, it does look like we are getting ready to have a pretty good correction. This is an outlier event that we're having in stocks right now. You're just not going to see 22 out of 23 up days in the market very often. It's just highly unheard of, and this is how the market's supposed to end. And this has been our biggest bull market, I believe, since 1938. That's basically what I'm looking at, so we'll see if that's going to happen. We've got a caller from sunny Florida. Send some of this warm weather to Philadelphia, Bob.
It's a little cool down here, actually.
Yeah, let me tell you about cool. It was 20 degrees this morning.
I know. I have a lot of family up in that area of the country, and they're getting hit early.
Amen. What can I do for you?
I'd like to ask you about the VIX, and the reason for my call is that I've noticed it's sort of been holding this area as opposed to what it did in the summer. If you remember early July, it got all the way down to about $10.30.
Yes, I think Basil summed it up on his show, is the fact that, it couldn't go into new low ground. And people have to be scared, Bob, because that VIX went from 10 to 31. It tripled in price. And so that tells you that there's some nervousness out there. Well, the nervousness stopped, of course, after we hit the 31 level. It came all the way back to 12, but it didn't make new lows. It went below the 786 retracement. But we've had a pretty strong move here, just in the last few hours. But when you stop and think, the market's been up 22 out of 23 days, you'd have to ask yourself, you'd think that the VIX would probably be trading at about $5, instead of 13 and change.
Sure. I use the same software that you use, Ensign.
Yes.
And I did notice, I found this pretty interesting. It's one of the things that I love about technical analysis. It's such a simple thing, but if I just drew a trend line from that July 3rd low, it's a rising line now, and it's held it. It's held that line.
Yeah. Well, I believe that we're going to have increased volatility. That's been my theme since July the 3rd, that this volatility that started around that time is going to increase a great deal. We're having average trading days in the Dow of a minimum of 100 points anymore. Triple digits is nothing. It doesn't even faze anybody at, CNBC or Bloomberg. I think they'll have to get a quadruple day, where you see 1,000 points in the Dow, either up or down. And we will see that sometime before the next 6 or 8 months is up, I believe. Probably something like 700 or 800 on the down, and then probably 1,000 points up, on the upside. And with electronic trading the way we have it now, that's not even hard to...
Okay. Great. I appreciate your insight into that topic.
Thank you very much, and all in, and have a wonderful holiday.
You too. Bye-bye.
Thank you. We have to remember, folks, that the rest of the world does not celebrate Thanksgiving. In fact, I have to say that with all the traveling that we do, one of the greatest feelings that you can have is when you land in the United States and you look up and says you're now entering the United States of America. It's hard not to get goosebumps when you see that after you've traveled abroad. Especially you go to a land where they don't. Can you believe that? I looked for 11 days to try to find popcorn, and I couldn't find it. All they had was the stale stuff imported from Japan that's flavored with wasabi, and I wasn't going to touch that. But I couldn't believe a country without popcorn. Even China has popcorn, so we'll have to talk to them about that. There was a G20 meeting going on in Brisbane when we were there, and what was interesting is you flew into the airport, you saw all of those really fancy planes from Germany and from Russia and from all these other places, and it's really cool. Australia's a wonderful place. It's just the best way I can describe it. It's just like California 50 years ago.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I'm going to switch gears here a little bit from the stock market, which I know less about than anything else, but we'll take a look at it a little bit later if someone has any questions. But I wanted to go to gold because we've had a $50 move in gold today, 25 down, 25 up. The important part about this is I posted into Tiger TV. You'll see that after we made the butterfly bottom down at $1,131 per ounce, you'll see that we had a very strong rally of about $70 an ounce over the last 10 trading days. And today we're having a lot of activity, dropping down $25, which happened to be the exact 38.2% retracement off of that low that we made back on the 7th of November. So this has been a relatively low volatile move in gold, even though it's 25 down, 25 up. You know, we've seen days of more than $60 or $70 back in the past, and I think we'll see that in the future. But if gold cannot get any lower than the low we had today, which was $11.75, it's got a shot at really having a move here. We've been watching this as a potential really good move. So far it started that way. Whether it's going to continue or not, we don't know. But the main thing to look at is that we're looking at the 382 retracement of the low from the 7th. If that's all we get, we're going to go, have to go a lot higher. And we'll see what's really going to look at. And we'll have some ideas of what's going on. Steve Rhodes just brought some attention to us. I think it's important that was back in 1987. The market had runs of 13 up in a row, also again in 1996. And so that's unusual. But to see a run like we have now, it's really going to be interesting when we hit these levels of resistance that we most probably will. Isaac Newton had a law. I think it was his second law of motion. What goes up must come down. And I think that's still valid. So far, some of the stocks that are still going up, like Facebook and some of the others, have not heard of that law yet, but they usually do eventually. So that's what happens. I thought it was amazing the fact that the stock market had taken out the 1929 record, which is the type of move that we're looking at here with this giant jaws of death or T6 pattern that we have going in the NASDAQ, the S&P, the transportations, the utilities, the real estate index. The list keeps going on, except for the New York Stock Exchange Index, which has still not gone to new high ground. That doesn't mean that it can't, but it hasn't done it yet with all the hype that we have going on at this particular time. Several questions have come in about the Japanese market. I posted that chart in last week. I think the last time I was almost a week ago Thursday. I had to miss 4 shows because of the travel. The time difference was just so bad that it was ridiculous. And not only that, but the internet connection was not nearly as good as I was expecting. So those were things that a little detriment to it, but we're done with our traveling for quite some time now, so that'll be easy to do. The Nikkei has completed a 3-drive to a top pattern on the weekly basis that has not taken out the high from, I believe, 8 years ago. And that top came in. The 3rd drive just happened at 17,500 and change. If we get above 18,000 in the Nikkei, that would invalidate that 3-drive pattern. And all of these technical things that I'm looking at are probably going to be different this time, and the market's going to keep going up and up and up and up until there are no more buyers, and then it will go down, 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 down because there's no more buyers. What goes up must come down. So we've got to be careful in here. We've got great volatility, and those are the things that we really like to see with pattern recognition. In fact, it hits these numbers, so spot on most of the time that it's really, really fun to watch it. We were actually prepared today for a move on that gold. We were watching it as a 618 retracement from the low we made back on the 12th, and that happened to be a 61% retracement of that low. So watch for these $25 moves that we're having in gold, and that doesn't mean it can't go back down again and go all the way down to 1160, because that would be the 61% retracement. So between 1175 and 1160, that's what we're looking at. We're going to take a look here at the gold and silver index, because that's been one that has been right on our radar for quite some time here, and it's acting relatively well given the fact that the rest of the market had a really strong sell-off. The gold silver index has had a pretty good run off the bottom. I'm going to do the weekly here because you'll be able to see it a little bit better on a really long term, because we had a really nice 3-drive to a bottom pattern, and we also had a double bottom pattern on the weekly, and so it's had a good move now. We've been up 2 weeks in a row in this, so you want to keep an eye on that, because it's got a potential to double in price, and that would only be a 50% retracement off of the highs of the year. So it could go from 73 to 140 and still be in a bear market. But when this occurred, just a few weeks ago, we were making a butterfly pattern. We're also making a double bottom from where we were in 2008, during the Too Big to Fail program that they sold us the bill of goods on TARP, Toxic Asset Relief Program. There's got to be a better acronym for that. It's something like, take the public to the cleaners or something like that. I'll have to work on that. But anyway, that double bottom came in perfectly. We took the low out by just, I think, 30 cents from October of 2008, And during November of 2009, we made a lower low, I think by just a few cents, and now we've rallied a little better than 10% in the first 7 or 8 trading days of this particular time. So there's a very strong probability here that we've had a pretty good low being made in both gold and silver, and the odds are still favor the downside because long term it still looks bearish, but shorter term it's got the signs that it could really look like it's getting ready to roll over, and that's what we're really taking a look at, I think. Someone asked the question, what are the probabilities of me being wrong in the stock market with these long-term patterns? I don't know, folks. I really don't know. I mean, I spent 4 days across the South Pacific and into Australia and New Zealand, and I mean, there was nobody that was thinking like I was thinking, and I showed these patterns. I asked people to go back and show me when they failed. It's almost very, very hard to find a failure in a T6 pattern because they just don't happen very often. You see them at tops far more prevalent than you do at bottoms. I don't know why that is, but that's just the statistics behind it. The bottoming patterns are usually our butterfly patterns or 3 drive to a bottom patterns. You see those over and over again. But with the T6 pattern that Gartley talked about, also known as the reverse point wave, it was certainly, very, very prevalent. It was interesting when we were in Auckland, New Zealand. I ran into a gentleman that came up to me, and he had said that he attended the class with Wells Wilder, who had used the reverse point wave as a trading system that worked very, very well, and he's lived in New Zealand for a while. He lives in North Carolina, Wilder does, I believe now, but he did enjoy the pattern. He said he used it mainly for really long term, and that's, he said it worked very well for him. So it's the first person I met that had taken that class in many, many years, so it's really, really amazing. Someone has asked us the question about these T6 patterns when we were making our bottom in 2008. No, we did not have a T6 pattern in 2008 in the S&P, the Dow, the NASDAQ, or the composite, or anything else. It was making a butterfly pattern bottom. And if you remember the volatility we had during that time, because Henry Paulson would come out and he would say, well, Congress is not passing the Toxic Asset Relief Program, TARP. The market dropped 777 points that day. So far, the biggest down day ever in the Dow. That record will be broken, and I believe probably sometime in 2015. But after that, the market broke down, stayed there for a little bit, rallied up 880 points, and then came down and made another low in March the 5th of 2009, and that was the third bottom. It was also the butterfly pattern. I posted this many times in the air, and I remember that because the newsletter at that time said it was the point of no return. We're either going to go up from here with the biggest short covering rally ever, or the melting pot of the financial markets are upon us. That still might happen to us someday because of all of these ETFs and all these exotic things that they have trading, and you have to worry about counterparty risk because, as we've seen with the Chicago Mercantile Exchange and some other places, that you're not as protected as you think you might be in some of these things. So we have to remember that the rules can change in some of these instruments, so you've got to be very, very careful. I'm particularly worried about the ETFs. That's one of the things. And the other thing is the option market sometimes doesn't act like you would think it would. One of the things that I talked about was the fact that we had they asked me for a strategy in Apple where they wouldn't have to risk very much. So I said, you sell the 110 call, the December call, and buy the 110 December put. And And I said, your cost on it's going to be about $1,000. And if it gets above, 117, you're going to be wrong. You're going to take a loss of about $500. And that should be it. Well, Apple has gone up another $3.50. The put should have gotten killed, which it didn't. And the call didn't go up very much. I mean, how can you buy a call and not go up very much when the market's up every day? So somebody's got to be selling calls in there because it's not acting like it wants to run very much. And Apple has been up. Just like the market, it's had 23 days where it's either had higher highs or higher lows than the previous days. That doesn't happen. That's so far out into the outlier event that it's ridiculous. In our history of commodity trading, we've only had 3 instances where we've had 22-day runs. Silver ran up 22 days limit up. It came down 22 days limit down. Sugar during the 60s was up 22 days. It also dropped about 19 days. That was straight down without any up days during that time. And we had one other time where we had something that magnitude going on, but I think there were only 4 times in all of our commodity trading history where we've had these 22-day runs. And we're just finishing. Well, I think we're finishing anyway. I'm not sure. But it looks like that's what's happening in stocks right now. I mean, the overwhelming percentage of people are bullish. Oh, by the way, I have to say something, and I'm a big fan of Robert Prechter. He's a really smart fellow and has done a great deal bringing Fibonacci and the Elliott wave. I don't understand the Elliott wave as well as I probably should because I keep it as simple as possible, but Bob has certainly done a great job with it, and he's a really strong believer of the geometry of the markets, and he's made a prediction that the Dow would go to 17,705. And yesterday's high, intraday, when you value the highs, each one of those stocks has to be valued on the high. It came to 17,025, I believe. So it didn't stay more than a few minutes above 17,705. So we'll see. Someone's mentioned that he's been bearish for years. That is not so. He's been bearish since about the time I was. Let me see. How many years is that? In the last few months, it's gone up. But the New York Stock Exchange Index has not really gone any higher than it was on July 3rd, folks. That's the real stock market. The stuff that they're feeding us now with the 650 stocks, that's 500 S&P stocks, 30 Dow stocks, and 100 of the NASDAQ stocks, 630 stocks. That's the one that they're reporting. That's not what the market is really doing. Pay attention to that. Maybe I'm wrong. Maybe it is different this time, and maybe it's time for me to take a ride to the end of days nursing home and put my old charting pencil up on the wall and start reading old racing forms. I don't think I'm ready for that yet, but we'll have to wait and see. But that's what it looks like. And we'll have to wait and see if this is going to if it's going to come to pass. Well, I'm just giving you the numbers. I'm just reporting it. I know what he's looking at, and I think he's pretty close, but, we could be wrong. We'll just wait and see. Folks, I know you if you remember back in 2009, I couldn't get a person to buy a share of stock no matter what. They had to force Warren Buffett to buy stock when he had to buy into Goldman Sachs. He had to get a 40% discount plus a convertible stock that he couldn't lose on in order to get money. So it was really difficult to buy stocks. You got to buy them when they're crying and sell them when they're yelling. And boys and girls, they are yelling now. I can tell you that. I was on Fox News, which is equivalent to CNBC, when I was in Sydney. I was on a program with a young lady and a guest, and they were there interviewing me because I'd come so far away, and I had written a few books, of course, but they had an idea of what my topic was, and I was kill the messenger. I showed the long-term pattern that I'm looking at, known as the T6 pattern, and I showed a few examples of what had happened, during that time, and of course they were interested, but Australia technical analysis is not the same as we were. So we got to take a little break here. We've got gold still holding up relatively well after the big break, and stocks are still under a tiny bit of pressure, but not much.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter,
In 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we have a question about Australia and New Zealand. Basically, for commodities, they trade gold and crude oil, of course, but for stock indices, hands down, they trade the DAX index, which is the German equivalent of the S&P 500. I've been following that for a couple of years, especially over the last year or so, and it is really a technical dream. It hits the numbers spot on. The patterns are beautiful. It shows the same ABCD patterns, Gartley butterflies on the half-hour dailies, whatever you have to look at. It does all of that, and that's the main thing that they trade for indices. Of their own indices, they have the Aussie 200. That is 200 of the biggest stocks in Australia. That also trades very nicely, as you would expect, because it's so so diverse and everything. And of course, there are a lot of mining stocks. Bunker Hill Properties and Rio Tinto. These are the ones that are there. In fact, part of my presentation was with Rio Tinto and Bunker Hill Properties, because they had made such beautiful 3-drive patterns when the market bottomed, and they had made some really interesting topping patterns of Gartley's and butterflies when it was making top. So it showed that the charts doesn't make any difference what you're trading. It's the sum total of all the buyers and all the sellers. And fear is a greater emotion than greed, and so prices go down faster than they go up. And there's no movies on complacency and greed in Hollywood. They're all about fear, and that's why fear is a greater emotion, because you can actually measure, the white knuckles and the dilated pupils and the diaphoresis or sweating. It's you can see that in people. So when markets drop, they drop faster than they go up, and this one went up pretty fast. So remember, from October 25th to what we hit last Thursday, broke all-time records. It really has. You just can't find how many times it went up 23 days. Even during the run-up during the dot-com bubble, which I 97, 98, did we have anything like that? And that was an interesting move, because that move took 2.5 years to complete. This one we've been going on since March the 5th of 2009. So we're well into our 7th year on this, and W.D. Gann always referred to the 7th year as the death year. And it has been for the shorts. So we'll see if that's going to be the case. I think the real thing to keep an eye on, folks, for making a buck without risking very much, is to watch gold and silver. They're showing signs that the luster might be coming back. It's still early. As long as gold can stay above that 1140 level and silver can stay above $15 an ounce, I think it has a chance. And I've been asked to take a look at crude oil right before we leave the show here today. Crude oil is in the same situation that we had with gold just a few weeks ago. We tested the 786 for the third time. Now it's $74 a barrel. We rallied about $1 a barrel off of that so far today, so it still has a chance. The last question I can take today is about presidential cycles. I've looked at that when Edward Dewey was still with the Foundation for the Study of Cycles. Gertrude Shirk, who was his assistant, sent me all kinds of information on presidential cycles, the 4-year cycle. And folks, I could never figure out how to fit it in to what I was looking at. That's how I turned to astrology, because those are the numbers that really made any sense to me, and that's all I can see. We have a president that's a lame duck. I'll stop at that, but we'll see if that's going to help with any of the things that we have. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.